following is an update and technical analysis on gold futures displayed within the weekly outer layer time frame, and I will be deep diving into GDXJ, one of the largest components to the junior miners of gold and silver. And we are of a massive bullish strength. One of the best setups you've seen in quite some time, in a near perfect long setup. Momentum, structure, and fib levels all align for a high probability move higher. And we have a ton of correlation and major reactionary highs and lows across the entire network and sphere of the Fibonacci retracement. And I had created it long before we had even tapped around the 2348 range, and there was plenty of reaction. Nice clean breakout with volume. We backtested 2 or 3 times. It had since been off to the races, off to the 27.99 handle at the 2.618 fibs, had a major reactionary high there. And we are within this huge parabolic uptrend line, huge parabolic uptrend price support level, call it around the 2682 range in correlation of its 50-day moving average hovering in and up above. And you are now presiding within a pretty major, in fact, major primary reactionary uptrend price support level in correlation, in confluence of the 2618 fibs retracement, honing in on that secondary target at the 3.618 fibs, call it 32.4964 price resistance. Look for a reaction there. If long traders and bull traders begin to take this into escape velocity, knocking on new record high after record high, and then ultimately leaning in on the 4236 Fibonacci projection at the 3,527 handle, and that would be an additional move if that level gets taken out, honing in up above. But make no mistake about it, gold is in a vicious bull market trend here within the bigger picture, beating the S&P 500 the last 6 out of 7 years. The overall Fibonacci projections, these levels are well aligned with historical price structure and breakout zones. And once again, just cutting through some of these fib resistance levels like a knife through butter. It is riding an established uptrend, breaking into Fibonacci extensions as gold is in full-blown bull mode, with Fibonacci targets aligning with historic breakout patterns. The GDXJ, meanwhile, is forming an epic inverse head and shoulder pattern, adding even more strength to the bullish case. And here, within the even larger picture off the monthly, you have an inverse head and shoulder classic looking bottom, and it looks like we could be within the beginning stages of taking that out. And when we zoom in, you'll have an additional head and shoulder classic looking pattern. This was the big picture off the monthly, and you zoom in and there is an additional inverse head and shoulder classic looking bottom with the breakout with volume on a volume spike up above. The neckline has been breached as of now, and here we are honing in on big time 55.52 price resistance, and that has had historical major reactionary high and lows, big time psychological reaction in correlation of the 61.61.8 Fibonacci resistance level. And if we take that key lines in the sand out with conviction, I would only press in additional shorts to get squeezed, any additional short setups and short covering, and everyone who was sleeping on Wall Street, institutions, big hedge fund managers, going in long on the gold that has yet to be mined out of the ground. Make no mistake about it, that is a well-defined breakout, where it has broken out of a well-defined trend line signaling bullish continuation. But the biggest line in the sand lies in the 55.52 handle, with volume expansion beginning with volume expansion supporting the move, and indicators like the Wilder's Relative Strength Index and price percent oscillator confirming this additional momentum. But once again, the breakout at the major 618 retracement zone would only reinforce much larger upside potential, where a failure to hold above the 55.52 handle could just lead to a false breakout and a retest of prior lows, and would be extremely bearish in my opinion if and when that were to occur. But for the meantime, make no mistake, the ball is in the bull's court here. This is a very powerful move in both directions, in both particular sectors and through the futures market. This is a strong, primed for violent breakout as the fiat system buckles under soaring deficits and a looming potential debt crisis, where central banks are draining gold reserves while the paper market sits on the edge of a short squeeze. The moment delivery demands expose the COMEX's empty vaults, gold's completely gaps higher, dragging miners with it in a brutal revaluation, squeezing out shorts.